Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 27th of October. All right, now US Treasury bonds. Just the first thing I noticed when I got the screens up were lower. Okay, and we are starting to see that relationship, slightly stronger dollar, even with those Treasury bonds coming off. Right, that's the way of it. The US equities, I'd say it's almost flat. I mean, they were slightly up, but considering what a major up move would be, like above 0.51%, and same for the downside. So I think the key part to this is identifying what's moving the market and then really focusing on the opportunities around that. So Treasury yields lower should mean at the moment the dollar block goes down and the dollar pairs go up, right? As far as the currencies go, that's the way. But we are starting to see the Baltic Exchange, a big 3.47% drop there. Now that should come, that's like 200% above its usual level. So that's not a big deal, but we are starting to see a bit of a pressure valve off some of these commodities. Now, just having a look at the charts, the pressure is building, right? And this is what you like to see as a trader. I like to see pressure building technically. Now, the sort of valve has been a little bit released here on the euro. If anything, it's a sell on rallies at the moment, breaking that short-term support level around 116, sort of 30. It still smells like a lower euro is coming. Now, what we are seeing, I like this setup here. And I left my resistance here on sterling just below that last point. I'd like to see the last move above before a move down, just enough to take out the last sort of short-term stop losses, short positions above that trend line. And now it's sort of coming up. You can see the action here. It's going to be action stations here on sterling, the Aussie, and the Kiwi as well, right? Once again, I have left that orange line there as the US 10 years. You can see the yields coming off, and has been sort of correlating quite a lot. So this could be a telltale sign if I'm correct with that relationship, and we could see all these pairs, the dollar blocks, start to fall if we see a continued fall in the US bond markets. Dollar CAD, well, it's doing its best. The dollar is trying to go higher, but of course, with oil maintaining its price there around $84 or 84.5, it's hard work going up. But I tell you what, this has got to be something you got to watch. If oil starts to fall and move back towards $80, you got to think dollar CAD's a prime target to get back to 124.40. And this is going to be very important because we've got the Bank of Canada meeting today, right? No change of rates expected, but it'll all come down to the statement and what they are thinking about, where the economy is positioned and what they may have to do to stimulate it or take some of that stimulus out. That's what we're waiting to see there in dollar CAD. I can tell you what, a stronger CAD puts more pressure on their economy, makes them less competitive globally. So anyway, we'll see how that plays out. But dollar CAD is going to be an important one as we go through today. All right, so you can see the pressure points building. Now it's just a matter of coming back and working out what's going to trigger these. Well, if I just get up the calendar here, trading economics, just so you can sort of see what the key data is, with the actual poll. So there's a couple of key releases out today. In the Asian session, we've got the Aussie CPI numbers. Now, this is a quarterly number. It has sort of greater emphasis because it comes out less frequently. Okay, the numbers you're looking at here, 3.1, 0.8. Okay, and where am I getting these numbers from? Over here. Well, so you've got these numbers now. A number of years ago, the RBA started bringing out their own CPI number, right? Doing their own sort of research. So you just got to factor this in. They're all sort of relatively important. Okay, so just be aware of that. So just having a look here, like 1.7. So it's quite interesting, right? So if you're looking at let me just clear the screen there for a second. If you're looking at the various numbers, let me get the pen on. The RBA numbers, this is the forecast over here. So slightly stronger year-on-year numbers, right? And the core inflation number up here is a weaker number, right? So That's a bit of a weird one, but as I said, I mean, it doesn't make it easy that the RBA are coming out with their own. We were arguing this. This has been out for about 5 or 6, 7 years or something like that. We're like, well, if your numbers are important, let's get rid of these ones, right? Save the confusion. But the RBA isn't really in a position yet to start talking about easing and these sorts of things. There's been a lot of positive euphoria in the market with a lot of lockdowns coming out, deadlines, I think, for start of December for the country to go back online. That's going to be important. So we are getting closer to that coming into play. Right now, what you have to do is measure or weigh up where's the Aussie position. To me, I still like the idea of a break trade to the downside. I know there'll be long positions sitting there and stop losses underneath that. So to me, I'm sort of focusing on my best outcome would be a weaker numbers. Okay, I like weaker numbers here, but most importantly, getting a follow through with weaker numbers on these two, on the weighted mean and the trim mean from the RBA, right? That could give us a nice trade to the downside. Likewise, if we get stronger numbers, well, it supports a move to the top side. Now, let's just see what else we've got. You've got, I think, the durable goods, okay, a big historical number, 1.8% forecast. The forecast, 1.8 was the prior. The forecast here is minus 1.1, right? So it's very important to understand what the number is, because if you just go off the prior number, well, you could get a positive number there and you think, well, that's not so good. I'll sell some dollars because it's less than 1.8. But the fact is the forecast is for minus 1.1, right? So when you're looking at this, that's your focus. That's your starting point for any moves. Stronger than that supports a stronger dollar. Weaker supports a weaker dollar, right? That's the general consensus. And then last but not least, of course, is the Bank of Canada interest rate decision, right? So this is going to be obviously very important for dollar CAD and the CAD crosses. We do have a bit of a conundrum at the moment, as I said, with this highly influential strong oil price, which is holding the rally back in dollar CAD. But, you know, I would generally say if there's no chance of a change in rates, just be cautious of the event because it can be quite convoluted. The statement can come out, they can make extra comments and counteract. You can see volatility, but it doesn't go anywhere in the end, right? So to me, if there's no possible chance of rates, stand right back and have a look. Of course, have your trade station loaded up. What you're looking for is something extreme out of that event to give it some direction. For me, the hardest part is working out what's going on. We've got the dollar trying to push it higher, and then we've got the oil price trying to push it lower, right? So that is a mixed bag. And regardless if we get stronger sentiment from the Bank of Canada or weaker, you're fighting that conundrum, right? Ideally, what we might want to see is see what the durable goods data does, and then follow through with, if we get some sort of momentum from that, then overlay the Bank of Canada on top of that. And that's all you've got to work with. So as I said earlier in the week, this is the fourth week of the month. We don't have all the wham, bam, thank you, ma'am, high impacting numbers, but we do have really good technical setups. So with that, you've got to use what's at your resources. So like Sterling, Aussie, Kiwi have really good technical setups. Actually, dollar Swiss is coming into that boat as well. Dollar CAD, well, it's starting to make its way back to the top side. I'd be looking for excuses to get long because that's where the momentum is. But those bottom pairs, the dollar block, I mean, Euro's already broken down. Sure, it's potentially a sell on rallies, or you can get into a trade down here, but you're going to have to really tweak your risk management because you're getting in not at the ideal entry level. Maybe that entry level comes with the durable goods or something else that comes out. All right, so that's where we are today, guys. Plenty to look at across all sessions, particularly obviously the Asian session with the Aussie CPI numbers. You've got, as I said, the US durable goods and the Bank of Canada interest rate decision there as well. Most important. All right, guys, have a good one. Cheerio.